Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of January 26th. January 26th, coming to the last week of January, coming around fast. Exciting month so far, a very profitable month. We're going to jump right into it. The first part of the video, of course, will be the market radar section. And again, a lot of information, a lot of education. And the second part of the video will be the educational part. Will be the watch list. That is focused on the setups for the next upcoming week. That would be next week. So we have some great setups, and we've had some great trades. I want to just start off talking about the S&P cash chart here. And everything started up here last week. We had a nice oversold level. We had that big range candle, and from that point on, we looked for a move back up. And we looked for this rise in trend line to be tested. And we did go up to that level, and we actually broke through that yesterday. And then today we actually came back and traded a little bit lower than that. And that'll happen. You know, we had this rise in trend line, which was really established, but we did come down and kind of flush through that before bouncing. So these lines are not, they're not set in stone. They do get violated sometimes, especially on news and some events. And this one had that ECB news behind it. So we did pop through that yesterday. But today we did kind of get that rotation back. The daily here is still positive. Everything about this setup was classic, just a momentum shift, and everything was really nice on this. So we were able to take advantage of that, having mostly longs on the table at that point and taking a lot of profits this week. The hourly chart also, at that point, we had an hourly and a 60-minute time frame. That really caused a good bias to the upside, and we had that. Now we've actually gotten up into an overbought level on the 60, and you could see that underlying trend line was violated yesterday, but we chopped around and actually started pulling back from this 60. And the 60 has been pretty good. It's pretty good, for the shorter term time frame, a little rotation here. So if we zoom out here, you can see 60 here got oversold, it got overbought, pulled back, it got oversold, pushed back up, got overbought, pulled back, got oversold. Now we're hanging around here. Now, whenever an index or the time frame gets embedded here, there's the possibility of further upside, but we can't count on that. Normally, the rhythm of the market here has given us that opportunity to, look at an overbought, and maybe the next rotation will be a pullback here. So going into next week, you could actually see the possibility of a pullback. And if that started pulling back and actually dropped that daily here and cross that daily over before getting a little extended, and this channel line actually started to hold up, even though we did get above it, the concept of this, retracement and the failure and the pullback, is still valid. It's still a very valid trade, but that has to be seen. I've got to really see that happen. I want to see that daily crossover. Really, it's about that. When we do have a crossover, a failure for a rotation, that's a signal in itself, and we can't really just guess on that because that would be guessing, right? So we're waiting for those setups.
ES Tradeometer oversold.
We ended up today closing down on the 5-minute chart, so that could lead to an early pop on Monday, but then we'll have some news over the weekend. We'll see how everything's setting up with the futures on Sunday night, and we'll be able to make that decision a little bit more, better decision on Monday morning on this potential setup for a bounce. But overall, a fantastic week. With the radar, again, daily here looks positive. 60-minute looks extended. The 5 minutes kind of positive just for a small bounce. The radar, I would say, is kind of neutral right now. It's kind of neutral. I see some upside potential. I also see that rotation back down on a 60-minute time frame. So with that said, we're going to continue to focus on the stocks. We're also going to continue to focus on the tradeometers, which you heard here just before, which is great. I traded using that today. I had 3 trades on that. All of them worked out great. It's been key on timing the short-term moves in the market, and the short-term moves are for scalpers. But don't forget, you could also trade the ETFs. You could trade the, the ETF trackers, the SPY, the Qs, the SPXU, the SSO, any of the leveraged ETFs that track the different indexes. The NQs, the YM, and the ES are all focused on the tradeometer. There's the gauge works for each one of those, and it's just been an amazing journey with that, and it's actually looking good. I've gotten back to the point where I'm actually depressed now that it's Friday and that the market is closed. Because all I want to do is get my next signal and take that next signal. That's how excited I am about that. But more on that later. let's start off on taking a look at some of the stocks that were setting up last week going into this week and why we took them and why we took them off. Now, you know, at Day Trading Radio, I focus on what we call a high probability method, and that is, you know, combining a bunch of indicators, 5 indicators, with pattern recognition and, you know, concentrating on those quality names, best of breed names in this type of style. So we have 5 indicators. We're waiting for those indicators all to line up to give us, you know, 3 out of the 5 indicators really to line up. And when we have that, that's what we're starting to look for a move in the stock. It could be to the short side or to the long side. You know, we always have to pay attention to the overall trend in the market. I think that's very important. You know, to determine what direction of the trade you really want to take, because the rising tide will lift most of the boats. And the same thing goes for the opposite. If we start going out, the tide starts going out, the boats start to go down also. All right, but as you can see, these are great examples of what I look for and what this watch list next week, or this watch list today, I'm going to show you, or show the members of Day Trading Radio. They're going to have, you know, I always say this.
Tradometer oversold.
I will not bring you anything that's not worth bringing to you. It's a Yogi Bearism. Meaning, you know, I don't want to, if there's nothing great there, I'm not going to bring it, but there's something great, I want to show them to you, and they're going to have the same setup as these. So let's start off and take a look at some of the trades we took this week and why we got into these. These are, you know, and over the last couple of weeks, because I haven't really done a video for the general public in a while, so if you're getting this is, you know, kind of a special video. Very happy. And I will actually give you some good setups today. I'm going to give everyone some great setups today. All right. So I'm just going to go back here, take a look at some of the recent trades we've been trading. We're going to start off with Coach. Now, Coach, we take a look at the daily. Quality name, but what we see is a recognizable upward channel. We know that flags work out here. We use the stochastics. What happens, we pulled back here. A nice pullback, back down to the 50. I expected this to, you know, to pop off of this. This had some positive commentary, and there was a big base here. Now, you know, seeing the overall pattern, you're going to say, well, this does not look like a good stock at all. You know, I dig deep into some issues on
NQ Tradometer oversold
on a stock, and Coach recently bought a shoemaker, which was kind of looked upon as a positive. A lot of analysts came out saying that this is going to be a positive addition, and they're going to be accretive very soon on the acquisition into earnings. This combined with some other things, we started seeing, you know, the stochastics pull back, the rising trend line, the holding the 50 in this base here. So it was an easy call to buy this into an oversold level. And right when we bought that into an oversold level, we had a nice run on that, and we just booked a nice profit. We got we took that off at 37. What did we get into? I have my notes here. Got it at 36.81, and we sold it at 38.74. So, you know, and it's pulled back. And the reason, you know, we like to get in and get out. And, you know, like a sniper.
ES Tradometer oversold.
Just very nice. I'm going to turn that down in the back. So we're out of this one already. It's pulled back. We could easily get back into it. But
YM Tradometer oversold.
That was the reason behind that. We had that oversold level. And as a daily oversold got into a level that we took that, and that was on the date was 121, was it? Let's take a look at the hourly. Yeah, we were pretty much just starting to entry here, Coach. 120 here. Right here, we're just starting to turn back up on the 60, and the daily was oversold, so we had a 60 daily setup. Right here is where we concentrated on it, and you can see the results from that. As we got into an overbought level on the 60, took profits into it, it's pulled back. Standard, you know, operating procedure for me. You know, not getting emotional, trying not to get, trying to believe that the stock needs to go to a certain place, just looking at the signals and saying, all right, we had a nice move, a nice profit. We got overbought on a short-term time frame. Let's take that back. Let's let that go. Take profits. Let this come back and maybe get in again. So, you know, we can always get back into a stock. So Coach here, great trade. Absolutely fantastic. Would continue to watch that one for another opportunity. Coach, COH. PSX here. Oil stocks have pulled back pretty hard. And as an HPS methodology, we have these what I call textbook plays, and we're called playbook plays. And this is the combination of multiple indicators. And one of the setups we call is the X marks the spot It's a channel within a channel. We're a channel here, and you can see the larger channel, but the two trend lines crossing over here. Combined with that reversal candle, combined with the oversold stochastic, made this a key setup. Now, I got a little early here, but on our first entries are usually just a quarter of positions. And once we get that X marks the spot, then we could really load up, bring our cost average right into that zone, and then it was off to the races. So again, we had a cost average here at 62.30. We took it off at 64.92, almost $65, and that was close to a $400 trade. And you could see the results from that, and it still looks pretty good, But when you look at this and you see this, it's what's great about this is you can understand what's a 1, 2, 3 pattern. I go over this all the time on the videos.
Tradeometer oversold.
Why does this fourth pivot area down here mean a lot? And what happens if there's a 1, 2, 3 inside of a 1, 2, 3, and they both line up here? And then you have that combination. If you could just take these trades alone, you'd be sitting pretty anywhere in the world you want to sit. It is the best setups in the world. All right, so not much more I could say. I'm not going to chase it here. I'll wait for a pullback, wait for another setup, or
tradeometer oversold.
Rotation. HP, same thing. We had a nice channel within a channel. We took this once up here, took profits, came back down. We got oversold. We had what's called a lane divergence. A move a little higher on the stochastics, a move a little bit lower on the price, and then from that point on, we moved up, and we had a nice profit on this one. We got in at 60.10, right down here, right off the lows, a little candlestick, and we took it off at 64.10. So we got 4 points on it exactly, and that's great. Today we had a little pullback on it. And it was just this one I'll continue to trade. I'm actually looking to get back into this one maybe possibly next week as the 60 just got oversold again. So you can see that 60 minute has just gotten back into an oversold level. Next one up here, we're just going to go right down the line. OXY is another one. And each one of these, again, there's a reason and, behind it. This, we had to move back here. We pulled back here. Kind of a double bottom. The daily stochastics were key here. It pushed up against the trend line. You take profits into that, not worrying about it. Let it come back a little bit more. We'll rotate back into this one once again. But as you can see, really good channels, understanding gaps and how the price reacts to gaps. Perfect ECL. The list goes on and on. Here's a perfect lane divergence. This was also a chart bounty setup. And a chart bounty setup is a member of Day Trading Radio, knows the playbook plays. You go onto the site, you understand what's the scenario I'm looking for. In this case, it's called a lane divergence. It's based on stochastics rotations. It's the original Lane, George Lane, how he set up stochastics and how to really just time the momentum and see this as an opportunity. So the price that here dropped here, the stochastics here crossed back higher, meaning that the price, the momentum is shifted, and you have a better price here. And that's basically, was the trade there. We got in at 101.88, and we took it off at 104.90. Once I started to see that divergence play out, it was pretty simple. And then from that point on, we're just going to, again, you're going to see more divergences today, more channels today, and just more profits next week. Coals. I mean, how do you just not, this was a banging the table off of this one, banging the table on this one, just an underlying trend line, oversold stochastics, what I call a 1-2 punch. It's also, what this one also is what we call a channel breakout stochastic rotation. So when we have a 1, 2, 3 channel, once you break out of it, you usually rotate back down. Lots of times you rotate back down to the trend line again. But really what happens is the momentum here shifts back in that pullback, especially if there's an underlying trend line, and you get that oversold level that combines with that trend line. It was easy. So I had most of the people in the chat room here got into this one. A lot of them took profits. I think it was a great day for everyone today as we all took profits into this. So again, textbooks level. Probably get some more upside on this. It's just starting to rotation back up. The SPXU, I did take that yesterday. I took a little hedge, see if we actually started to see a little pull, but I took it off today. Market was showing some strength. probably could have kept it on because the market ended up selling off at the end of the day and just started to pop back up. So probably was a little fast on taking this off. If we actually held on to it, as you can see, it would have been a very good trade, and it would be a good hedge. So, that one is what it is on that one too. All right, we're going to start off with a couple of stocks that we're currently holding, and FSLR is one of the ones from last week's watch list, and this is our textbook wedge pattern. You can see we have the recent crossover. This is pushing back up. This actually looks great. It's not my favorite stock. I'm not a big fan of solar. I don't feel like it's the most accepted form of energy. But recently, we've been hearing, especially at the State of the Union address, that President Obama was talking about climate and how it was the, climate and global warming, and how it's been the hottest years. The last 14 out of the 15 years have been the warmest years on record. Energy stocks and alternative energy could get a reaction off of this. This has a lot going for it. It has has our setup. It also has a pattern setup, and it has multiple underlying trend lines that are all banging off this level. So it actually looks pretty good. We're in the it's starting to move back up here. I'm in at 44 and change, I think, on this. I have no reason not to believe that we're going to get back up to that 46 level, or at least up to 45.55. Which would be a little area of resistance, and then we have that 50-period moving average up above 46. This is pretty nice. It's a nice setup. I like it a lot, so we'll continue to hold on to that. All right. All right. Next stock up here, Oshkosh, and again, here's a good one that got oversold, but we kind of get a little extension here, and understanding again how stocks work, and sometimes when we take out the recent lows, we flush out those weak hands. And then we end up trading back into the original pattern. And that happens so many times. This has basically all the characteristics of a really nice setup. There's actually a couple trend lines coming down here too. You can see them all. X marks a spot in that zone. Couple trend lines there, But the fact is, we picked it up here. My cost average right now on OX on this one, OSX 4105, and it's moving up. It has a great bounce. It's just starting to rotate back up here. I'm looking at a possible target up here in that 43 area. I think there's a good shot of actually getting back up there. Oshkosh is the truck and vehicle things, and again, trucks and vehicles with gas prices low tend to work together. JBHT is another one just acting very good. NAV is one actually that we might put on the watch list soon because it is setting up, and we might actually see some action on that soon. But the OSK here, been in this one multiple times, and we'd like to trade this. We actually took this one out of this last flag here, and the underlying trend line popped up. It's pulled back enough, but this now looks like a great bounce underway, just starting to move up on the daily. 60 is extended up there. But even if we rotate back down, it should hold up, and we should get a further move higher, at least up above 43. So feeling really good about this one. Continue to hold on to that. There are some stocks that I'm holding that are down. The metal steel stocks, I always experiment with the MT. This one has broken back down and gapped down today. We started getting a nice balance, and it gapped down and pretty much got crushed across the board on steel. U.S. Steel here getting a hit here pretty bad. I'm not into that one, but the MT got hit pretty bad today. Might end up taking that one off. That's kind of a cheapie, and I try to stay away from the cheap stocks. So just an update on that. The IDTI, this is looking good. We looked at for $19 on a target on this. We already got a nice profit. We're in at 18.31. Our target was above 19. We already moved above 19 today. I think this one still has upside. It's a very strong chart. Happy about our entry, and it continues to look good. I mean, it's just a positive stock. We're not trying to concentrate on dirt stocks and stocks that, what I consider called stock rot. We don't try to concentrate on those too much here at Day Trading Radio. On occasion, we might get a nice pullback in a steel stock or coal stock that might look aggressively cheap. But remember, that term is relative to what the market really thinks. And, sometimes cheap is not cheap. Cheap is, at zero sometimes. But this one is a cheaper stock, but the pattern here is great. So, you can stick to great stocks and, have those lower prices. But I find that the bigger, stocks above $50, even in that 100 range, tend to work out really well. They work good on patterns. You want to really be true to your methodology. You want to stick to really quality names. So that's what you're going to see here. Quality names, time and time again. I try not to bring any penny stock crap or anything like that going your way. There is a couple other small ones. MDLZ, which is Mondelez. This one's just off the highs here. It's been chopping around in this base. We won't even call it a base. We'll call it a channel. Yesterday it looked like it was actually ready to go, and today it sold off and closed on the lows of the session. Mondelez, it's a spin-off of Kraft. The chart is good. This is kind of 180 reversal, meaning that we kind of spiked up yesterday. We started off and we ended on the lows. Today we started off at the highs and ended on the. Yesterday we started off and we ended on the highs. Today we started off at the highs and ended on the lows. So that's your kind of 180 reversal. We really need to get back above this level, 3760 we'll call it. Above 3760, I think there's actually a trade, MDLZ. So I actually have that, and I'm actually going to show you the chart on this right now. All right, you remember that channel here. Again, the buy would be a break above this channel. Well, I'm going to actually make it a little bit easier because this is a 180 reversal. We're going to take the buy trigger if it breaks back above this 180 reversal with a stop right underneath the 180 reversal. So no matter what this does, if it pulls back a little bit further, we're not going to, again, the trigger won't happen until it gets back above this previous high. I have it over here. We have it in the back end, so you'll get those alerts. You'll get the emails if that happens. And again, that's for the members. Even though I'm giving this out to the public right now, we have a bigger list later coming out to the members. But I'll just kind of update you on that. If this buy trigger is hit, because of that big reversal day, this will be a very positive event. You probably come out of this downward channel too, which there's a couple trend lines here. We can get rid of this other line. But overall, if we break back above that buy trigger, 3760 to 3780, should get us up to that, give us $1 on that trade. And then once that triggers, that stop, which is at 3685, will trigger, and that will adjust. If we do come back and hit that, you'll get that alert also. So that's, again, a nice little setup, kind of a momentum play here and a kind of a safe play here. Now, during the show over this week, I've been just kind of going through a lot of great setups that we're talking about that are setting up this week. Under Armour, again, the very positive lane divergence and the flag setup, and showing great strength even today, even though the market's pulled back. So that continues to be good. The Nike here, also a nice little flag here. We haven't broken out of that flag. These are some that you could definitely take as a thing. They're not on the watch list officially, but they are definitely there. The Corning GLW. Beautiful flag. I mean, I like this a lot. It's another cheap one, It's another $23 stock. It's a great flag. It's right at the highs. It continues to push higher. I would expect this one down the road to be $25. So there's a lot of great things here. Merck. Again, textbook flag. These flags have been really key. This is holding great strength on the daily. And again, these are some of these you might actually find on the watch list. Fortinet, FTNT here. We've talked about this secondary flag that's set up. Knowing how stocks move, the very good flag. We see so many times we have a good flag, we get the breakout, and then the consolidation pulls back in that secondary flag that sets up. So many times I like to just, kind of discuss with you that event, and there's one that I outlined for you that was setting up for a secondary flag, and you can see the results from that again. And FEYE, FireEye here, is another nice flag, and this one actually still looks very good going forward. And you can see we were breaking out of that flag, pushing up against the 200. Nice day today. Well, any of these stocks are going to be winners for you going down the road. SRCL, beautiful, beautiful here. And one that I was banging the table on today, and one of my favorites going into next week, I'll leave you with that, is Palo Alto Networks here. We have that position. We have a nice push in it. We're in at, what do we get in on this one at? 124.63. It's 126.81. So, we already got 2 points on it, and I would expect this to push up towards that 135. I think this is a great trade, and I don't think it's too late on this one either. It's kind of an engulfing pattern here. Looks fantastic. And there's so many others. Again, I want to actually cut the video short here, and we're going to pick it up for the members of Day Trading Radio, because I have a list here of really the key setups, the lane divergences, and the real textbook flags I'll be getting into next week. So if you like that watch list and you like the stocks that we trade and the alerts and everything that goes along with it, the dashboard, you guys got to really check out our trading dashboard that all the members get with the live alerts, the live news, the live pit feed. Again, all the controls at your fingertips, and and that's it. And we'll see you in the markets. I'll be broadcasting Monday morning. I can't wait till Monday to get here, and we'll pick it up there. So, and don't forget, I actually just put out a tradeometer video. I just put that on YouTube. So definitely check that out. We're using the tradeometer a lot next week, and this week it was great. So looking forward to that. Have a great weekend. We'll see you next week in the markets. I'm DayTraderRockStar, and I'm signing off.